Hey guys, I'm back with Russ. I'm going to have a little discussion with Russ about short sales and foreclosures. First off, Russ, what is a short sale?
Well, Tim, a short sale is when the bank or mortgage holder is willing to accept less than what the total indebtedness to the home is, and the mortgage company also absorbs the selling expenses. Your normal customary expenses that homeowners have to pay realtors and title companies to do their sale, the bank or mortgage servicer, they call themselves, will be the person who pays those bills.
Okay, why would a bank take less than what they owe?
Well, it's a financial decision for the banks. First of all, contrary to popular belief, the banks do not really want to screw their customers. Okay, they really don't.
Okay.
And it's also less expensive for the bank to take a short sale to them off their balance sheet to take a short sale versus a foreclosure. Because in a short sale, I do all the paperwork and administrative work for the banks, okay, and I earn my normal regular commission for that. In the foreclosure world, they have to have attorneys, they have to take the court action, then they have to take securing the home action, so they add quite a bit of cost to their bottom line, which really in the end results in two things: less net to the bank, less recovery, they call it recovery, and it actually adds to the deficiency that the homeowner or the mortgage holder winds up with, because they count all of those costs in foreclosure against the homeowner.
Okay, so what's the advantage to the homeowner that's fallen on hard times? Why don't they just mail the keys back to the bank and walk?
Well, to be quite honest with you, that's a good question, and I face that question with my customers. By the way, over the years, I've done over 1,500 to 1,800 short sales successfully, so I'm coming from a position, I've been there, done that. I like to tell people when I did my first short sale, I had more hair than you did. Actually, that's funny, but I had a full head of hair a number of years ago. So the advantage to the customer is the foreclosure is a FICO event. So when you have a foreclosure, it will hit your credit score from 300 to 350 points instantly.
Okay.
Short sale is not a FICO event. FICO being credit score. That's what FICO stands for.
Mm-hmm.
And the short sale is so much faster to be recovered from financially. A foreclosure will stay on your record for 7 to 10 years, resulting in everything that you buy on credit costing you more money, which decreases your net worth and your spending ability. Cell phones, anything that they pull credit scores for you to get. Homeowners insurance, almost everything they pull credit scores for. So the foreclosure puts you behind the 8 ball, whereas the short sale does not have that impact. Now, a short sale is not impact free, but if you're faced with a foreclosure or doing a short sale, the short sale is your far better option every day of the week.
Okay. Now, can just any real estate person do this for me?
Well, one of the things we say in our business all the time, Tim, that we've learned in our training, there's a thing we say in our business called fake it till you make it.
Okay.
Unfortunately, this is one of those things that it is very complicated, it's very detailed, and I've learned through experience. It's been trial and error and tears and terror. I've learned through doing it. And I've also wrote a course and taught a course on this. Agents are great specialists in what they do. For instance, you do land and farms,
right,
and you're one of the premier known people in land and farm sales.
Right.
You also do residential.
Yes.
Short sales is a very specific real estate niche. So a realtor may tell you they've heard of one, they know one. I always tell people, ask them how many they have successfully closed. And if you find it's not very many, they really probably will not possess the skill set to successfully get a short sale done.
Okay, well, if this is a very unique niche within real estate, what made you decide that you're going to be the short sale guy?
Well, I'm going to be honest with you. It started out with a tragic story. In 2006, one of my previous customers came to me and said, I'm in trouble. I'm going to have a foreclosure. Can you help me do a short sale? And I'll confess, unfortunately, I did it, the fake it till you make it thing, and there was no one in the area doing them yet. So short sales hadn't even hit the Kansas City market yet. They were being done in California, they were being done in Nevada, being done in Florida on the East Coast, because our market had not been hit by the housing collapse yet. So I did her short sale for her, and tragically it ended in a foreclosure, because frankly I didn't know what I was doing. I'm not a person that likes to have that kind of trauma or tragedy to anybody, and I swore that I would become an expert in this field and not let that happen again, and that's what I've done.
That makes sense. We all have motivation. That sounds like a good one.
I think of her all the time. I could name her, but I will not. I think of her all the time. 10 years that foreclosure rock hangs around your financial neck.
Wow, that's a long time.
That's a long time. It is.
Hey Russ, so in short, what you're saying is, if someone's fallen on financial hard times and they're afraid they're going to lose their home, what should they do next?
They should get a hold of a short sale expert,
Okay.
and give us a call. The thing that sometimes people do now, and one of the things you've got to know, Tim, it's very important to know. I mean, I can talk on this endlessly, but I'm going to try to not overload information right now. So the type of mortgage you have is very critical. If you have a Federal Housing Administration or an FHA loan, or if you have a Fannie Mae, or you have a VA. I do a lot of veterans. I'm a 20-year veteran myself, as you can probably see from my sign. I retired from the United States Navy.
We'll forgive you for the Navy.
Thank you, a Marine. So, at any rate, what I will say is that all of the quote-unquote mortgage insurers, most mortgages have default insurance built into them.
Okay.
And you may or may not recall that when you got your mortgage, but you are paying most likely either a higher percentage point on your interest rate, or you're paying mortgage insurance premium, that's called by the FHA, which is insurance for default. Okay, which is what pays for these programs, to be quite honest with you. So you bought the insurance, you should use it. And the programs are specifically driven by all of those entities, and they all have their own short sale procedures, their own short sale guidelines, of which I'm quite confidently know every one of those procedures. I know every one of those guidelines. The mortgage companies do not want to foreclose on you. However, by their deed of trust, if you default, they have to eventually.
Okay.
So until someone like me steps in and can help you interface with the bank and the mortgage servicer and help do the paperwork and the procedure, they're going to eventually take you to foreclosure and take your home from you. They're going to evict you. They're going to put you out on the streets, and then you're going to have this financial rock hanging around your neck for years to come.
Okay. Well, it sounds like if somebody has a problem, just reach out, give us a call. I'll put you in touch with Russ. He's your go-to guy.
And don't fuss, call Russ. And if you have farm and land or residential real estate, give me a call. We are partners in what we do, and we aim to give you outstanding customer service and take care of you. And it's my mission, if you do not want a foreclosure, on my watch, you will not have a foreclosure. I can get you out of the situation. Thank you.
Sounds good. Thanks.
Thank you.